Welcome back, traders. I'm glad to have you here today. The next long-term chart pattern on our list is the diamond chart pattern. As the name implies, the diamond chart pattern is sporadic in the market. This means it doesn't appear as often as the triangles, channels, head and shoulders, flag, and rectangular patterns. To apply this pattern setup, you need to wait until the pattern is entirely formed on the chart. However, technical traders should be familiar with this chart in case it appears in the market so as to be recognized early in order to take advantage of its opportunities. The diamond pattern most often occurs after an extended trend price movement. This could be in a strong bullish trend or in a bearish trend. Whenever it happens during a bull market, the pattern is referred to as a diamond top or bearish diamond pattern. Likewise, if it happens during a bear market, the pattern is referred to as a diamond bottom or bullish diamond pattern. The diamond chart pattern can act as a reversal or continuation pattern in the market. If it occurs in an uptrend after a bearish pullback, it could act for the continuation of the existing bullish rally. Also, if it occurs in a downtrend after a bullish pullback, it could act for the continuation of the existing bearish rally. In order to have a reliable and powerful trading entry with the diamond chart pattern, make sure these patterns are formed at the horizontal support and resistance zones in the market. As a continuation pattern for an uptrend, the diamond chart pattern will form when the price has broken upward out of a consolidation period, suggesting a continuation of the prior uptrend. Likewise, a continuation pattern for a downtrend. The diamond chart pattern will form when the price has broken downward out of a consolidation period, suggesting a continuation of the prior downtrend. Let's study how to apply the diamond top chart pattern for the reversal of a strong bullish trend. As we can see on this price chart, the diamond top chart pattern here appears after a strong bullish trend. Not only at the top of the bullish trend, but is at a powerful resistance level in the market. Zooming out on the price chart, we can see the level of the formation of this chart pattern was at a previous powerful resistance level on the trading chart here. The highest peak of the diamond top chart pattern aligns with this resistance level at $1.82. There was 5 consecutive bearish rejection of price downward at this level. Also, the lowest trough of the diamond top chart pattern aligns with the previous resistance level at the price level of $1.798, which is now new support for this pattern. This was the first signal that the diamond chart pattern that formed at the top of the bullish swing here has a higher probability to be a reliable and powerful pattern. The diamond top chart pattern was in between a powerful resistance level and a minor support level. This, therefore, signifies the diamond top chart pattern bullish breakout of resistance could act for the continuation of the previous bullish trend. Likewise, its bearish close of price below the support could act for the reversal of a bullish trend. As we can see, the chart pattern was formed after the price made a swing higher high, followed by a swing higher low, which is the trough of the pattern. And the next bullish swing carved another higher high swing, which is the peak of the pattern. The last leg swing is the lower high swing that signals the buildup of bearish sentiment in the pattern. And this is why, most times, a bullish retest may not occur after a bearish breakout of the diamond top chart pattern in an uptrend, because the last lower high swing already gave the early bearish confirmation entry. We can see how the previous bullish trend was reversed into an aggressive sell-off. Although, conservative traders might have preferred to make a short entry at the strong bearish close of this candlestick. How can traders set a stop loss on the diamond top chart pattern? To set a stop, the best zone is at some distance away from the high of the lower high swing here. How can traders set a take profit target on the diamond top chart pattern? There are 4 options to set a take profit target when trading the diamond chart pattern. 1. Traders could set a minimum of 2 risk to reward ratios. 2. Traders can target the next powerful support level in the market. Targeting the next potential support level in this market means you are indirectly targeting a 1.5 risk to reward ratio. And that's if you are short at the strong bearish close of the candlestick here. But if you short instantly from the bearish breakout of candlestick here, that would give you a 2.5 risk to reward ratio. 3. Traders can decide to trail their profit as the trend moves down. If you were to trail your profit down based on the instant selling entry, you could have trailed between 4 or 4.5 risk to reward ratios to the previous resistance structure here at $1.74. 4. Traders can implement the measurement objective target option. To do this, simply take the measurement value of the diamond chart pattern from the trough here and measure to the peak here. The next step is to replicate the measurement value derived from the bearish price breakout point all the way down in order to forecast the bearish price movement objective. If you applied the measurement objective target, you could have targeted the support level at $1.77. The measurement objective targets based on an instant sell entry from the bearish price breakout is 2.6 risk to reward ratio. The same strategy to trade the diamond top chart pattern can also be applied to trade the diamond chart pattern for the continuation of a downtrend. In the next video, I will educate you on how to spot and trade the diamond bottom chart pattern.